Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So trading as of today, these are the ICFX options products. We have dollar-based products. If you're trading these, you need to recognize that the dollar is the base currency. And if you're bullish on this, you might be, if you're bullish and you want limited risk, just call it LR, limited risk, you'd want to be buying calls here. If you are bearish, so if you think the market's going down, I'm just going to have to delete this. So if you think the market's going up, you might be buying calls. If you think it's going down, you might be buying puts. It would be the exact opposite, though, if you're looking at the dollar quote. So if you're bullish on the dollar here, you'd be buying puts. Otherwise, you'd be buying calls. So you need to just turn it around. The simplest way to really think about this is what do you think of the base currency? So once you have that view, you can easily implement an option strategy. And the most important thing, though, is you need to know these symbols. These symbols are very, very important because that's what you would type into your broker. So it would be AUX, BPX, CDD, EUY. These are the symbols: YUK, PZO, NZD, SKA, and SFC. Or if you wanted to trade dollar quote, and we created these for you, for those of you that are spot traders and wanted to have something that just looked exactly or very much like the spot. Well, we created Aussie US, British Pound US, Euro US, and New Zealand US. So these are available also. So the features, they are no longer just dollar-based. They're actually dollar-based or dollar quote, but everything else is the same. We have options on exchange rates. They are 50-cent strike prices, premiums quoted in U.S. dollars, European exercise, they're cash settled, noon settlement and option expiration. The rate is at the WM Reuters rate, available in an equity options brokerage account. So you need to open a brokerage account, an equity options brokerage account. We have two-sided quotes for market makers. So you're not going to be trading with the exchange. The trading hours are now, we just actually expanded the trading hours. So now we are trading these from 7:30 to 4:15. So for those of you that are in Europe or if you're in Asia, this might be a benefit for you because we are actually trading 2 hours earlier. And that is Eastern time. So here's an example. I'm going to look at dollar yen. Again, dollar yen way back when was around 100, so I thought it made it easy. Again, it's dollar versus yen. $1 is 100 yen. So what could I do? Well, if I was bullish on the dollar, again, looking at the dollar-based, what could I do? Well, I could be long the spot, U.S. dollar yen, or I could buy a call option. So I'm looking at, let's say, different strike prices. And what happens if I put it on at 100 and it goes down to 90? Well, I would lose my entire 2 points. I'm not going to lose 10 points. Of course, you're going to leverage up in the spot market also, so you'd probably lose more than that. But this is not using any leverage here in the spot market. But I guess just about everybody uses some leverage in the spot market also. But again, just to keep it simple, the benefit here is that if you are completely wrong in your trade, you're only going to lose 2. You're not going to lose 10. The disadvantage when you buy a call is that if the asset doesn't move, you don't lose anything being long the cash, but you would lose your entire premium here in the options market. If the asset moves up, well, you're not going to make all 10 points. You're only going to make 8 because it's going to be worth 10, but you paid 2. So that's a quick summary of why you might buy calls. They give you the ability to control the U.S. dollar exchange rate, or basically they give you the ability to control the base currency. Options are about timing and magnitude. If you're correct, the leverage allows for greater rewards. If you're incorrect, an investor can lose their entire debit. Well, why would you buy puts? You just turn that whole trade around. So if you thought that the dollar might sink, again, it's dollar-based. If it goes from 100 to 90, your put's going to be worth 8. Well, your profit's going to be worth about 8 at expiration because it's going to be worth 10, but you paid 2. If you just said shorted the spot market, you would have made 10. However, if you're really, really wrong, and this is the benefit of being long an option, you're only going to lose $2, whatever you paid. You can't lose any more. Remember, if it goes to 120, you only lose $2. So that's you could lose 20 in the spot market. And that's the advantage of options, limited risk. So puts give the ability to sell the base currency, and again, it's always about timing and direction. An investor, let's say there's another view. If you're an investor and you wanted to insure a position, what could you do? Well, you could hedge. So you might look at what happens at expiration, and you buy your hedge. You make $8 on your hedge. You lose $10 on your trade, on your long U.S. dollar position. So you would lose about $2. But again, you didn't lose 10. You only lost 8 because you only lost 2 because you made 8 in your hedge. So that's the reason you might consider hedging, is to limit your risk. Again, if you hedge and it doesn't move, you lose your entire premium. Think of hedging as a form of insurance. If the direction doesn't change much, well, then you're going to lose just about all of your hedge, unless you sell it prior to expiration. Protective calls will be the same thing, although again, if I'm looking at protective calls, I might be looking at it depends on what you're trading, but if you're looking, let's say, at dollar versus yen, why would you be looking at protective calls? Maybe you have a bearish position on the yen in the spot market. You want to hedge yourself, and therefore you can buy some calls. I've seen some questions about connecting here. Unfortunately, I can't help the person that's not connected already, so anybody that unfortunately will have to come back to FX options if you don't have a great connection.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.